All right, we're talking about forbearance, deferment, and other mortgage relief options that are available to you if you're struggling to make your next mortgage payment. And you know, I struggled on whether or not I even wanted to make this video yet. I'm wondering if it's too soon. Right now we're in the midst of the massive COVID-19 pandemic, and yet we don't really know what the total impact on the housing market's going to be. We don't know what the total economic impact is going to be. And therefore, I don't know if these options are even going to be necessary for many of you. And yet, we hear it in the news every day, that fear-mongering, the insane fear-mongering that we're hearing right now about, oh my gosh, millions of people are going to lose their homes. The economy is going to spiral down. You know, again, I don't know what the total impact is going to be. And yet I do know that that fear-mongering creates a massive amount of anxiety in so many of you. I also know that the more knowledge that you have, the more you know about your options, the better you're going to sleep at night, the less that anxiety is going to be. So I felt like it was important to get in front of the camera today and tell you what those options are. I'm going to discuss 3 options for you today: forbearance, modification, and refinance. Now, before we get into that, I think it's important for me to let you know that I'm not an attorney, I'm not a tax accountant, and therefore none of this information should be construed as legal or tax advice. This is really for educational purposes only. If you think you need more advice, please contact an attorney, contact your tax accountant, and talk to them about it. My name's Jeremy Higgins, and I've been a real estate agent here in the state of California for just over 15 years. I work with the Good Home Group at Remax Gold. And I was in the business in 2008, 2009, and 10 when we were in that massive housing crisis. And I remember sitting across the table with all of those clients who were fearful. They were afraid that they were going to lose their homes like that. Some of them thought that they would get evicted in the middle of the night. It was pretty insane. I don't want you to feel like that. So here are the 3 solutions. Solution number 1, forbearance. A forbearance is essentially an agreement that you make with your bank that allows you to suspend your mortgage payments for a period of time, usually up to 12 months. And then you have to enter into some sort of an agreement about how you're going to get that money back to the bank. Now let me give you an example. If you say you suspended your payments for 6 months, on month 7, you would be required to begin making your normal mortgage payment again, but then you would have to figure out how you're going to pay back the entire 6 months that you just missed. Now there are a couple of variances of forbearance, and I'm going to go over those right now. Example number 1 is what I just talked about. You're going to get into the agreement, you're not going to make your mortgage payments for a period of time, then you start making your normal mortgage payments, and you figure out how you're going to repay all of those missed payments in one balloon payment. Example number 2. Mortgage payment reduction. This is where your bank allows you to reduce the amount of your mortgage payment for a period of time, and then you enter into a repayment plan, usually over a 12-month period of time. So maybe if you did 3 months of reduced payments, then months 4 through 12, your mortgage payment would be a little bit higher than it normally is to repay the reduced amount in those first 3 months. Example number 3, also known as a deferment. This would be where the bank allows you to suspend making your mortgage payments for a period of time, usually up to 12 months, and then they simply add that onto the back of your loan. There's 2 ways that they can do that probably. One would be for them to just extend your loan however many months that you didn't make payments, or 2, they would put a balloon payment at the end. Now you must be asking, what happens if I accept this forbearance? What happens to my credit? All that kind of stuff. Well, fortunately, the government just passed the CARES Act, and in that CARES Act, they gave us 5 different protections there, and here they are. Protection number 1, provide up to 12 months forbearance. Protection number 2, waive all penalties or late fees for the forbearance period. Protection number 3, halt all foreclosures or evictions. Now, I'll be honest with you, this one's probably not going to affect you very much. If you're current on your payment right now, and you just weren't able to make your next payment and maybe payments after that, you would not be foreclosed on for at least several months. The foreclosure process is not a quick process. Protection number 4, suspend all negative reporting to the credit bureaus as it relates to your forbearance. Protection number 5, and this one we have to wait and see how this plays out. But essentially the directive said it wants to allow the banks to enter into mortgage modification with you at the end of your forbearance period to help you figure out how you're going to repay that forbearance amount. Now I say we have to wait and see this one play out. And the reason I say that is sometimes things sound better than they actually are. I remember back in 2008, 9, and 10 when the government came out with loan modification programs. But you know what? It was like a joke sometimes. So few people were able to qualify for those loan modifications. But I really am hopeful this time around that the banks and the government learned their lesson. I really do feel like they're intending on making this okay. They want to keep that economy going. They realize that this was not a housing crisis. This was not what we had last time. This is a COVID-19 crisis. So if we can keep the housing market propped up, you know what? The housing market took us down last time. Took us down an economic spiral last time. This time it may very well be the housing that brings us up and keeps us out. All right, solution number 2, loan modification. Now this is exactly what it is. They're going to modify your loan. So let's say that you had a 12-month forbearance. You didn't make payments for 12 months, and at the end of that forbearance period, you're obviously going to have a large amount of money that you have to pay back. Probably going to be pretty difficult if you haven't been employed for a while. So then they would enter you into a loan modification. There's 2 ways they accomplish a loan modification in most instances. One of them is they just extend your loan by the number of months that you missed, kind of like the deferment, but they modify the loan officially to create that. The second way that they do that is through a lower interest rate. So if you're at a 4% interest rate right now, maybe they knock that interest rate down to 2%. That helps keep your payments lower, and then they help in the repayment plan of the forbearance amount. Now, I think it's important to state that these specific options available to you are going to be specific to whoever owns your loan. So a lot of these terms that I'm talking about here, these are the terms that came out of the CARES Act, which specifically relate to any government-backed loans like Fannie Mae, Freddie Mac, Ginnie, that kind of stuff. So all of this stuff that I just explained is part of that CARES Act that related to them. Now, there are about 38% of loans across the nation that are not backed up by the government in that way. However, Mark Calabria, our finance director for the feds, he came out the other day and he said about 95%, he believes about 95% of the lenders out there are going to have very similar, if not the same exact solutions for you. All right, solution number 3, this is a refinance. Now, you know, it goes without saying that in order to refinance your loan, you're probably going to have to be employed. You're certainly going to have equity in your home, and you're going to have pretty decent credit is going to be required. The reason I bring this up is because there's a lot of people out there today who may not be completely unemployed, but might be underemployed. Or sometimes there's people who may need to pull equity out of their home in order to keep their employees on payroll. So that's when refinance might be an option for you. The cool thing about refinance is when you do refinance, generally speaking, your first payment is not going to be due for a month, probably 2 months after your refinance goes through. So that buys you some time to use that money elsewhere. The other thing that a refinance does is it allows you to pull money out, your equity out of your home if you need to. You can pull $40,000, $50,000, $100,000 out, put it into a little nest egg, and now you have something to live off of over the next couple of months. Or you can help out family members, whatnot. All right, those are your 3 solutions. And if you haven't done so already, please click the subscribe button below there. That does a couple of things for us. 1, it ensures that you're going to be able to see these videos in the future. I'm going to continue to put these videos out. 2, it lets me know that it validates that what I'm doing is valuable to you. I want to hear that. 3, it tells YouTube that you like it. And when YouTube knows that you like it, they push it out to everybody and more people get to see it. That's exactly what I want to do. The other thing that I'm asking you to do right now is go down, make some comments. Do you have any questions? Do you want to hear about anything different? Have you had any different experiences? Have you been calling your banks? What are they telling you? I want this to be a community-based conversation. We can all learn from one another. I thank you very much for being on this video today, and I can't wait to see you on the next one.